Hey there, traders. What's going on? Jamie Saettele here. It is April 16th, 2021, and welcome to the Power Hour with me, Jamie Saettele. We are going to be going through the macro charts here, FX, commodities. We'll take a look at the S&P. In fact, we've already got a question on the S&P. Someone's asking, S&P or ES near term? For those of you unfamiliar, ES is futures, so S&P 500 futures. So what we're going to do here is I'm actually going to bring up, it's actually a good way to start. I was going to start with S&P futures anyway, and they're asking near term. So before we dive into a near term chart, let's take a look here at this daily going back to November, and we have what appears to be an expanding diagonal. So you can see here essentially line that connects everything, every high since November, and we reached that yesterday. And see how we finished today, but we've got 3 hours left in the day. We could get, a key reversal of sorts if we close under yesterday's close. If we go to a near-term chart, let's go to an hourly. On the open this morning, the first hour of the day, we did have a big key reversal, and since then we've gone absolutely nowhere. So as far as any sort of near-term analysis, to whoever asked the question, I don't really have a whole lot to look at other than this, and that's just this beautiful, simple line that crosses every single high since November. And again, this is an expanding diagonal, which is rare, but can be seen at the end of a bigger move. So I am looking for, we did get resistance. You can see here's a 4-hour chart. We did get resistance today, and gun to my head, I like fading the move here. That's that. Okay. All right. So that is S&P 500 futures. Why don't we take a quick look at, see if we have anything on the volume. All right, so we did get nothing on a 4-hour, nothing on an 8-hour. So yes, we did get an hourly reversal this morning. Not a whole lot to write home about there, however. And that's really about it. Let's see here. Yeah, so that's it. That line that crosses all those highs from November. That's all I'm paying attention to at this point. Okay. Moving on real quick to the dollar, US dollar, right? So recall that we had turned essentially neutral. I did maintain, I was constructive, stayed constructive, the dollar generally, as we got into this 200-day average. And I was looking for a pullback, and the level that we were looking for support, if you recall, you can go back a couple weeks, look at the archives, but we were looking for support around 11,800. Basically just this center line right here, right? Median line. Well, we've dropped into that level, and we are not really holding it right now. We tried to today. You can see that today's action, we had a pop here, was looking nice this morning, and now we're back at the lows. So, I hate sitting here and saying that, a drop of a couple ticks under the proposed support level negates anything because it doesn't. But the dollar really is kind of, you know, pressing my patience, put it that way. But that's how it's supposed to work, right? So bottom line is we are at a support level here, okay? You know, look, if I just put up, you know, former highs here, okay, you got this. I would even say down into, you know, 11,754. But generally speaking, this center line is key, right? If we see like the levels that we've crossed on this center line, okay, down here, is it perfect? No. Now, we did have some perfect touches down here, support in November, resistance a couple times on some spikes in December, right? Resistance here in March, even that was not so-called perfect, right? We had resistance here for a couple days, went through it, pulled back. I was hoping we would hold here, and we did not. That was 2 days ago, but again, we are in the right area, the general area for support for the dollar, okay? All right, so let's go to euro. So first things first here for euro, great level. We've been trading into resistance for 3 days. You can see here the high of wave 3 within that huge 5-wave rally from March 2020. That is the September high, and that is 119.90. And that is just above the current level, which is, we've been pressing against these highs from March for the last 3 days. I'm going to put up an hourly chart here so that you can get the view of this 5-wave rally. I thought we had ended over here. A, B, C, D, E, maybe something like this. Right? So you can see that 5-wave rally. Pretty clean, right? And I bet if I were to throw up an indicator of sorts, like RSI or something, that we would have some divergence, and we do on the hourly chart. Right? You can see here magenta dots indicating divergence. Now, this is, I haven't talked about this during these webinars yet, but this is a good time to reference this. So I often, you know, I hear people talk about divergence a lot, right? RSI divergence. I have a stricter definition of divergence. So one, yes, you do have to have, so for example, this would be, people would call this divergence right here, right? Higher high in price, lower high in the indicator. Now, I do not call that divergence because I want to see RSI below 65 or above 35 at the, you know, the final price high, so to speak. So for me, this would not be divergence just yet. If we got another price high here, RSI would probably be below 65 because it's currently 62, and then we could have divergence on a 4-hour chart. But as of right now, we don't have it. All right, so here's euro again, 5 waves up, great level into those March levels right here, those March highs. And just above again is going to be 119.90. So we're in the right zone, and have the, you know, a pattern to look at where we should be pulling back relatively soon. Okay, now it's early, but my thinking here is that support's probably going to be about 1830 to say 1860. And, you know, I'm going to want to turn bullish on a pullback here in euro. There's a couple reasons for that. One, obviously, the rally from the low is indeed in 5 waves, but also you've got a big 3-wave pullback before that. And finally, remember this. We had that VWAP from the low back here in March. right? March 2020, the low. That's where we bottomed. Perfect. So again, we turned bullish back here, actually flipped from short to long over here. And of course, I got out like, 3 days after the low and have missed the gains over the last week or so. But needless to say, a pullback we're going to want to be turning bullish on that. So if we do creep a little bit higher than I'm thinking, again, which is 119.90, then pay attention to about 120. This is futures, so pay attention to about 120.30 in spot, which is going to be VWAP from the high, which is also VWAP 2021 VWAP, which is this right here. So, again, short term, you want, at least from my vantage point, you want to be fading strength up here and looking for a pullback and eventually turning, bullish on that pullback. Okay. So that is Euro. Let's go to cable, which had a heck of a spike lower today before turning higher. And by the way, if you have questions, you can ask them at any time, and I will address them as they come in. All right. Okay, so I've got cable pretty much into resistance up here. Not perfect, but here we go. Where did I just, here we go. Okay, so here we go. That's what I was looking for. All right, so we've got this 200 period average on the 4-hour chart, which you probably noticed I follow a lot. It's a great little trend filter, and this is essentially the bottom of the resistance zone. The top would be about 38.60, and you can kind of look across here and see those levels there. There's a high here from February, support here from March, bunch of little ticks here, right? Little pin bars. So 38.60 would be the level that, kind of the top of the resistance zone that I'd be looking for. But again, like Euro, we're basing, this is 2021 VWAP. Whenever I have these futures charts, I have this thicker, bold line. That's always going to be the VWAP for the year. So, we're trying to base around it, right? And frankly, if you just look at this from lower left to the upper right, this is an uptrend, and we've pulled back, and it's choppy, which means it's corrective. Yeah, and we are trying to put in support at an important level. I was hoping to get us a little bit lower, like 135-ish, which you can see was that huge resistance here from December 2019 as well as September of last year. But at this point, not sure if we're going to get it. Near term, just pay attention to 38.60 as possible resistance. And that's about it. Frankly, Euro is much clearer at this point than pound is. But needless to say, we will keep an eye on 38.60 and cable. Ooh, I want to look at dollar Swiss because dollar Swiss is extremely clean. Okay, so I included dollar Swiss in my update yesterday, and we came into a massive level. Okay, and actually I'm liking the action today. We spiked lower, and we're bouncing a bit here, but this is the March 2020 low. You've got resistance here from November. It's also the 38.2 retrace of the rally from the January low, and it's probably this parallel. Oh, it's not. All right, but hourly chart, clear as day. 1, 2, big 3, right? 1, 2, 3, 4, 5, 4, and looking to me like a diagonal here, right? 1, 2, 3, 4, 5. So probably move that over here. But as I wrote this in yesterday's update, essentially this is your trigger line. So above 92.45, but at this point you could say, you know, probably above 92.30 or so. You know, to turn near-term bullish for dollar Swiss. Let's see if we have any volume reversals today. Big spike higher during Europe. And nothing so far. That's okay. All right. I just realized that we did not look at the ICE dollar index yet. Hold on. All right, so here's DXY. DXY is awfully clean in terms of where its support is. So shift fork followed that on the way down. We have a regular fork here on the way up, and we're there. So again, 50-day average, fork, horizontal levels, yada, yada, yada. Looking for a turn higher here in DXY. So beautiful support, or proposed support here, I should say, because we haven't seen if it's acted as support yet. And yeah, looking for a bigger bounce. So you can see how with these European currencies, we are pretty clearly into important levels. Okay, Aussie. So I'm not afraid to say when I am wrong. And in this case, I was completely wrong. So last week, I think my title was something about being bearish commodity currencies. And then this week, notably, I guess it was Wednesday, commodity currencies absolutely exploded to the upside. And I did not see that coming, and that's okay. We'll move on. So right here, we have a neckline of sorts. I've seen this pattern before, just like when you get a head and shoulders, right? And then you kind of get like a, I don't know how to say it, but like a complex right shoulder, I guess, possibly. Is that what's going on here? I don't know. But if it is, we've kind of entered the vicinity where we should expect to see resistance in Aussie. You can see from this neckline, as I mentioned, really, if we don't, start to roll over here, and today's a good start, but really we don't have anything till like 78.20s, and that's going to be, you can just see the 618 retrace and these nice horizontal levels here, right? Resistance back to January. So, we want to see us turn down here, or we don't have anything probably for another 90 pips or so. So it's kind of wait and see. We did get yesterday we did get yesterday a 4-hour volume reversal, and we'll show you what that looks like. Okay, hold on. All right. So that was right here. We essentially had a big volume up bar followed immediately by a big volume down bar, and you know, we tend to get those at turns. Like you can see some of the examples here, you know, decent here, some false signals of course on the way up, but we did get one. And again, we are also at 2021 VWAP, right? So again, that's why this is also a good place for us to turn down or attempt to. Kiwi, also the same thing. Before I move on from these futures charts, you can see here Kiwi also into 2021 VWAP, literally perfect actually. So maybe I'm a week early on the commodity currency deal, but as far as being a bear, here's the Kiwi chart. We don't really have anything for Kiwi except for that VWAP level, because really the next levels for, excuse me, for Kiwi, they're 72.29 to 65, followed by 73.50, 70. Okay. And if you just look at a Kiwi chart, 71. There we go. This is a good dividing line. We'll throw that right there. Okay. 71, resistance back in December, support from January through March. That to me is a good, you know, good dividing line for Kiwi. So kind of, you know, bullish above, bearish below is the way I'm looking at it. Let's see what the channel looks like. And that's a channel. Yeah, okay. By the way, 71.90 is the year open in Kiwi, if you were wondering, which we almost hit yesterday. Also up the 50-day average here. Okay, so that's that. Dollar CAD. This is yesterday's chart that I published, and we nailed what I like to call daily reversal support, which is 24.85. Whenever you see a bold line, we have a comment here. I'm a beginner, and your chart looks like I am watching a Chinese movie without subs. So I guess you mean subtitles. Well, I hope at least it's a good, like, kung fu movie, you know. So get the popcorn and enjoy the show. But here we have a, again, beautiful channel in dollar CAD. 5-wave rally, three-wave drop into a well-defined level. I did turn bullish yesterday on that reversal. We are coming back here, but risk is tiny. So essentially you're, you know, trying to be bullish against yesterday's low or bullish against yesterday's low, and upside is just, you know, let's wait and see. But yeah, that's that. Don't have really anything else to offer on dollar CAD. Dollar yen, little 5-wave drop here. Here's a 4-hour chart. You can see here 1, 2, 3, 4, 5. The little 5-wave rally is also in, or 5-wave drop is also in 5. 1, 2, 3, 4, 5. I noted in yesterday's piece that we could slip a little bit lower. Like, do we need to take out this 108.40, 30 area, which is a nice, well-defined level? If we do, so be it. But I am looking for a bounce. Now, that doesn't mean I'm looking to buy it here. What I am looking for is a bounce to sell. So, essentially back up towards 110. That's the setup. And I do like the short side in dollar yen, bigger picture, as long as we're below this high, because we had a false break above the 2018 2020 line, or channel, if you will, and that false break kind of leaves a bearish look, if you will, right? A trap. People got trapped trying to buy this up here. We broke down, and now they're long at bad prices, so that should give us some downside pressure. Okay, let's look at some commodities. Most important one for me right now is copper. And again, long term, back to 2001, trend line. Underside of that line was resistance. Daily chart, we continue to hold the line from March 2020 just perfectly. As I wrote yesterday's piece, looking for resistance at 426.35. That is daily reversal resistance. This chart, by the way, is a perfect example of what daily reversal resistance and daily reversal support are. So you can see the low day right here, which is March 4th. That's daily reversal support. You can see how that was support. Okay. In fact, we dipped below it and closed at that level like 4 times in a row. Or four out of 6 days here, back in March and April. This high day, on that close, that is daily reversal resistance. Okay, so we've had a nice reversal today, so we might not get there, but if we do, that's where you want to be looking for resistance. Okay. Oops. Silver. Silver, unclear to me. I talked about this last week because silver was literally in the middle of the range. It still is. By the middle of the range, I'm talking the middle of the range from August of last year and that low in September, right? But really what it's starting to look like here is just kind of a massive triangle of sorts, right? Let's see here. And yeah, I don't have anything decent to look at here. All right, so here's a short-term chart of silver. And again, I don't have anything on like a bigger picture other than just saying we're in a range, which is okay. But you can see the channel here from the low. We topped basically right on that channel today. So, and we're putting a pretty good reversal here over the last couple hours. As long as we hold this, level up here, is like, by hold I mean stay below it. I lean towards the downside on a very short-term basis. But again, copper is really the one to follow in terms of metals right now, in my opinion. Gold has been fairly clear. Again, remember last couple weeks, we did, and at least we were correct on this one, looked for and called the lows on gold, primarily based on the fact that we were at channel support. And this was real clean. Remember, we talked about the 75 and 25 line within the channel. We came up, hit that 75 line. It was resistance just as it had been support before. Banged around it, came back, hit the support. went through, came back, it was support again. I'm talking about this line here, the 75 line. And right now we're at the center line, so there's not a whole lot to do here. I still think that 1830 could be a decent spot to get into for gold. Let's take a look at crude though, because that's always an important one. And this thing might be about done. So this was a chart from a couple of days ago. We do have the 5 waves down from the high in March. And from there, we've got an ABC correction, right? And here's how I'm counting this ABC. We got A up and then triangle B. A, B, C, D, E, right? So this is a triangle. Wave B is a triangle, an Elliott triangle, if you will. And from there, we've got a 5-wave move higher, okay? You can see 1, 2, probably 3, maybe a little pullback, maybe one more move higher. Either way, I'm looking lower, and we have reached initial or the bottom of the zone for resistance. And again, that's 63.88 to 65.05. Okay, so before we look at some crosses, a little announcement, okay? As you all know, I'm working as Chief Technical Strategist for Scandinavian Capital Markets, based in Stockholm, Sweden. And we are looking for profitable money managers to join our ranks. So, you know, we have clients all over the globe looking for strategies to invest in. So if you are a profitable trader and would like to join us, venture into the money manager world, we can fund your strategies with up to $2 million. Okay, so come show us your skills. If you want to try this out, go to scandinavianmarkets.com/fundmytrades. Again, that's scandinavianmarkets.com/fundmytrades. Okay. Again, if you have questions, please let me know, and I will get to them as soon as I can. All right, let's take a look at a couple of crosses. I'm still very, very interested in some of these yen crosses. Things have really died down, though, over the last couple of weeks. Let's see, let's go to weekly chart. Okay, Euro yen. Back to 2012. I feel like we've been trying to hit this resistance forever. Okay. Right up here. So it's like 130, 150. If we can just get one more shot. I mean, look at this little consolidation. Been sitting here for like a month. So 131, 130, 150 is where, you know, set an alert there for Euro yen. I want to see us test it. The bearish trigger is essentially down here, 129.50. But this is where we're really looking. Pound yen. Remember that 153.85 level, which we didn't quite get to. But the support level, by the way, is the center line of the channel. It goes back to March. But what we're looking for here is resistance at, you can see I got the bold line at daily reversal resistance, which is the close of the high day. 618 is just about there as well. So we've got a really great zone to look at for resistance. Call it 150, 160. And if I were to zoom into this hourly chart, probably have an impulse here and probably have something like a wave, 3 waves down into a B, and then trading higher in a C. So this would be called a flat correction. At least that's how it looks to my eye. Either way, 150, 160, pay attention to that for resistance. Here's a question. Itzaku asks, how do you read the candle chart? Well, Itzaku, a candle chart So just a quick and dirty here. Candle charts are going to show high, low, open, and close. The high is the top of the wick, right? The low for that session, right? Or whichever, in this case, we're looking at a day, but the low is the bottom wick, okay? The open is the top of the body, okay? And the close is the bottom of the body. In a dark chart, or I say, a filled-in chart, when it's hollow, or white in this case, that's an up day, so the close would be up here, okay? But yeah, it's a nice visual in terms of seeing, resistance and support, because you can see what are called the wicks, right? The wicks showing, spikes and whatnot. You see it a little easier than, say, a bar chart. I like to look at bar charts for pattern, like, Elliott patterns and whatnot. And I like to look at candles for just, seeing where support and resistance may be on that chart. Okay, Aussie yen. Again, this is another one, a good example of daily reversal resistance. We've been trading into this level for seemingly ever, but it's only been a couple weeks. With this one, I'm not so sure that we don't try to go test that 86.40 level. And again, here's that level. It's the 2008 low, 2016 low. And you can see how that level was support and then resistance. And, we tried to get up there in mid-March, didn't quite get it. So if we go for one more run, 86.40 is where you're going to be. And that would be ideal for kind of the next, level to potentially top at. Those are the yen crosses that I'm focusing the most on. Okay. All right. So it pretty much covers it for me. Again, if you have some questions, please let me know. I do want to remind you that we at Scandinavian Capital Markets are looking for profitable traders to join our ranks. So again, if you are a profitable trader and if you would like to venture into the money manager world, we can fund your strategies with up to $2 million. So come show us your skills. Register at scandinavianmarkets.com/fundmytrades. Again, that is scandinavianmarkets.com/fundmytrades. And we do have a question here again from Zaku asking, what is support or what do you mean by support and resistance? Well, support is where buyers step in to support the price, to support price advances, and resistance is where sellers step in. And essentially, it's think about it in supply demand. Resistance is where the supply is, and support is where the demand is. So if I were to say just a simple chart here, right? Let's say this is a range, and the market trades like this, and this isn't reality necessarily, but this would be resistance up here, and this would be support down here. By the way, if I were to say the most important chart to keep an eye on for the next couple of, or for next week, I should say, I think it's copper. Okay. Again, we've got to be getting close to a big resolution here. If we can break this trend line, that would tell us a lot, I think, about risk appetite, the inflation trade, et cetera, et cetera. Okie dokie. So if that's it, then I wish you all a wonderful weekend. And please join us again next week for Power Hour with me, Jamie Saettele. And until then, take care and good luck.